So, very quickly, what's the Clearinghouse about? Here you have a diagram of how the financial system is connected to the Central Bank of Mexico, the national payment system. As you can see, the Bank of Mexico has connection to commercial banks, and then commercial banks provide accounts to businesses and people. However, there is a series of other financial institutions. We can call them social sector financial institutions, saving co-ops, community banks, popular banks that are owned by the people, and they are prevalent throughout the country, but they are not connected to the Central Bank of Mexico. And that creates an asymmetry and a restriction in terms of the services they can provide to their customers, which are also their owners, physical persons or small businesses. Now, this creates exclusion. The financial sector of the social sector is left out, and we have isolated institutions that are much more dependent on cash and without access to digital inclusion. This is an example of one of those community banks. This is in Puebla, San Pablito. And as you can see, they are truly small financial institutions. And they serve the community where they work by providing savings and loans, and if they had the chance, transactional services. One of those services that we want them to provide electronically is the payment of remittances. Why? Because in these communities where the community banks operate are actually the places where the migrants come from, right? So they have left this land, they've gone to the United States, and then send the money back. Now, we want this to be electronic. Why? So that the money that is sent, the remittances, become savings, so that those savings can then be recycled in those communities and become loans. And those loans can become development alternatives so that the pressure to migrate for the next generation is much lower, okay? So this is what we want. We want them to be connected to the Central Bank of Mexico, not only so that they are connected to the international financial system in terms of receiving remittances from abroad, but also so that the government can make government payments like the salaries of the teachers that work in those communities directly to the accounts of the community banks that are in those communities, right? And of course, there are also government subsidies and so forth. So we want to make sure that the liquidity, that the money stays in the community. Otherwise, it gets siphoned away from the community, and then you have dry areas that are lacking liquidity and thus development, okay? So our solution to allow for that connection is the People's Clearinghouse that, as you can see in that diagram, is the midpoint between the series of community banks and the national payment system. This will allow for the social sector to act as a network to make transactions between themselves, also to allow access of low-cost remittances based on accounts, not cash payouts, and they have access to a full digital infrastructure. Now, we want to do this by using available technology. Mojo Loop that we mentioned has Interledger core. The Interledger protocol itself, especially with Rafiki, as we will detail in a few seconds, and National's real-time gross settlement payment system, which is called SPAY. We will use all of this technology to basically connect and enable an open source platform for P2P transfers between the members of the community banks, and also for remittances and other payments that come from outside the closed loop. Now, like I said, we want to allow, as the main use case and the one that will more quickly be available for the members of our community banks, is to make transfers from a client or a customer of one community bank to another customer of another community bank. This can be done using our Moja Loop hub that will be hosted at the People's Clearinghouse, right? So this is what the simplest use case is for a clearinghouse. Allow for payments to be done from one institution to another, and then there's a payment from another to the first, and you have a multilateral network, you clear, and you settle, right? This is the role of a clearinghouse. Now, this requires abundant investment in technology, not just in the hub that will be hosted, like I said, at the PCH, at the clearinghouse, but also it requires a conversation between the hub and the core banking and the cores of each of these financial institutions, right? So this is what we are going to do. Now, something important here. PCH is not an external entity. The People's Clearinghouse is owned by the Mexican Association of Credit Unions, which is the community banks that are here today. And so in that way, we make sure that there is a market for the clearinghouse. As a digital and account remittances environment, PCH promotes more liquidity in customers' accounts and fosters regional savings and investment, which is what I have already explained, okay? Some people in the US like this project a lot because it is a different way of thinking about migration. It is about creating opportunities in the local areas where the migrants come from instead of just adding more and more restrictions. Now, how many community banks, what type of market are we talking about? This is a sector that community banks and cooperatives alike serve 13.2 million people. That's around 15% of Mexico's adult population. And we have also talked to members that are outside of the Mexican Association of Credit Unions and that serve over 1.5 million people. And our 140 community banks serve over 200,000 members, and this is very important, over 6,000 communities, right, in the peripheral parts of Mexico. To get an idea of how much money flows from the United States to Mexico through mostly cash channels where cash payments is what's done at the end point, we're talking about a $58.5 billion market. Every year, $58.5 billion are transferred as remittances from the United States to Mexico. It's the corridor, the remittance corridor with the most market size in the world, where about $400 per remittances are sent in every transaction. This is about 150 million remittances in total, or about 400,000 remittances per day. Now, of course, this is huge, but we will try to shoot for something reasonable. And just to have an idea of the size of the remittance market in the municipalities where the community banks that are part of our network, we're talking about 15.3 billion that go to those municipalities, or around 40 million remittances or transactions, about 100,000 per day. If we can get a small chunk out of that to fund the reinvestment in the local communities as people's savings that can then turn into loans, we have gone a huge way. Now we're in the process of negotiation with 9 of the 10 largest saving co-ops in Mexico, and they have confirmed their interest in using the People's Clearinghouse for these purposes. Like I said, we're 140, but the CONCAMEX, the Confederation of Saving Co-ops, is 154 middle-sized saving cooperatives, as you can see there, all around the country. Earlier this year, we had a very interesting public forum where we presented these ideas in Mexico. We had the presence of international visitors, including Interledger's very own Chris, who was there with us as well. And we also had government officials that participated in the public forum. As part of the public forum, we included a visit to the community banks and to customers of the community banks so that we could make this tangible and not so theoretical in nature and understand why it is that we are doing this. This is the public forum which was hosted by the Federal Treasury of Mexico, and we had people from the central bank and so forth, and I think it was a successful event. Now, at what stage we are? Well, we are right now, and we are very proud to say that we are advanced in the regulatory authorization process. A couple of months ago, we filed the authorization for the clearinghouse, which would be the third or fourth clearinghouse to operate in the country of Mexico. It is an extensive file for around 300 pages long, and it's right now under review by the Central Bank of Mexico. This is something that we are very proud of because it took us a lot of work. So if you want to give us a round of applause, that's nice. This is basically where all the research phase of the grant went to, because it's like basically writing a doctoral thesis, and you have the central bank as the main professors there. We had to do a lot of paperwork, and all the risk management manuals and onboarding and settlement, so on and so forth. So right now this is under review by the Central Bank of Mexico. Like I said, we are very proud of this, and we hope to engage very soon with them to discuss all the details prior to authorization. So this is a step before we go live. This would give us access as a clearinghouse to operate with the Central Bank of Mexico, and then to have access to the national payment system, which would basically allow us to make these transfers nationally and internationally with the use of Fed Global. Now I'm going to give the floor to Carlos Dietemeier to explain a bit about our team.
Hi, everybody. I will be fast. Thank you very much. I'm Carlos, so I am very proud to present our team. I am new. I'm very new. I just recently joined this fantastic team. So let me present all the people. I will ask them to stand up. You can know them. Isabel, Antonio, pueden pararse. Okay, I want to mention Isabel is a pioneer in financial inclusion for several years in Mexico. She's very well recognized in all Latin America and the world. So tomorrow she's giving a panel. You are invited. So what I want to mention also that I am in charge of the IT area. So it is very challenging for me. But however, what is our approach? Our approach is to develop an IT area in a small community with indigenous young professional engineers. So we will train them to learn the best practices of software development, maintenance, support, everything what implies the life cycle of software. So our focus is to be in a small country, in a very small village. So with that, we will get very committed people to the project, committed to the long-term objectives of our project. So that's like I wanted to mention. I will let Roberto to.
Okay, so after we have seen the general idea of People's Clearinghouse, very quickly the question is, what do we do with remittances? There is the commercial paths would involve the SPAY, which was already mentioned, but we can do our own system, especially because we're calculating $63 billion in this year in incoming remittances. That's, of course, a commercial issue. We want to be part of that, but much more than that, given what Andres was explaining, this is a local development matter, because these microbanks will invest in those communities. So the idea, in one word, in the highest possible level, is we have a Rafiki connecting to an entity which is both a Rafiki participant and a modulo participant, and this, at the same time, passing to a modulo participant. So it would look like this. We have a US wallet, which connects using Rafiki to a participant in Mexico that also implements Rafiki, but it's also a modular participant. There's a central hub, and so you pass from one to the other. Now, this is Rafiki, this is Mojalup. It's quite simple, quite clear. Now, what we can see is that the process that guides Rafiki transfer is, of course, you find you create a routing, quoting, and transfer, right? Which is in a sort of different way the same process that we follow in a Mojalup transfer, which is the one we see in the right. The idea here is that we can actually make them coincide in order to make a transfer pass from one to the other. And what this means, sorry, I'm going quick because we don't have much time, so I'm very sorry for that. Just that brings several questions, right? And we must say the settlement question is solved by a beautiful part that we can discuss out of this meeting, because there's no time really to discuss settlement right now, but we can discuss it in 20 minutes, anyone who wants to know. But mainly the question is, how do we do this? And we have had an incredible discussion for the last months, maybe the last 4 months, I think, with Sabine, Max, and all the Interledger team in general, and also with Michael Richards and Vijay from Infotix, who have been very helpful, and even with our friends from TitsaWorks, who have got so many ideas into the table. And the final question is, we had to make some decisions. So I want to mention just 4 very quick decisions that had to be taken. The first one is, who does the FX? Right? Let's say, for the argument to go quickly, that the settlement question is solved. So we're only recording obligations, right? There's an obligation, which is a message going from the US to Mexico with certain conditions so that the respective ledger are updated, and on the one side you lose money, on the other one you earn money, so to say. It's just a recording of obligations. Now, should it be Mojalup? Can do it. It's not yet active, but it's in process for... Should it be Rafiki on the US side? Should it be Rafiki on the Mexican side? Any idea? Okay, we don't have time to have ideas, so let's just answer. Okay, Rafiki Mexican side. Why have we chosen this? Because we want to have control of the effects, because for obvious reasons, the effects that you assign to an individual transfer is correspondent, or must be correspondent, to the settlement effects, right? If you are giving out $50,000 as a pre-funding strategy, let's say, well, each transfer somehow has to correspond to that, otherwise you're taking an enormous risk. So we want to be in full control of the ecosystem, especially because we're in the social sector, and we want to make it as cheap as possible. And for that, we have to reduce risks, because when you have risk, you need to raise prices, of course, obviously. So we saw that Rafiki is enough, and Rafiki is perfect, because we can do it in a simplified way by calling an API already published, accessible by the Central Bank of Mexico. And given that our settlement unknown solution involves the Central Bank of Mexico and its official FX, well, we can actually make them correspond in a very easy way. So that's a simple and fast solution. Second question, quoting. So both systems, both Rafiki and Mojalup, can do quoting, but who should do it? So if you do Mojalup quoting, that's possible. That's even the most accepted solution of the discussion we had. But it involves having something like a payment manager or a Mojalup connector in the US entity. So the facility that you had when you said that any Rafiki entity could eventually become a participant of this process to send remittances to Mexico gets a bit more complex, because now they have to solve the question of Mojalup, unless we solve it for them, of course. But let's say that's a bit more complex. But also, the second option is possible. Now, there's a problem. Rafiki, as you know, uses Interledger protocol, and so you cannot necessarily know in advance what the exact quote will be. Well, that's a problem, because the Mexican regulation, the US to Mexico remittances regulation, requires that the exact amount be established before the transfer is made. That's not an option. So what could we do? And it works. We hard code the quoting so that we can do a workaround. And this works, has some issues, but it's a very good starting point. So both are possible. Now, third question, should it be an end-to-end transfer with all the beautiful things that comes when you have a single transfer and an end-to-end relationship, or should we divide it into 2 transfers, right? The first one in our discussion has been quite complex to establish for reasons I have no time to explain, but we can discuss it, or we can show the diagrams, the sequence diagrams. But the 2 transfer solution, in fact, is very good. Because as long as we have a pre-funding strategy, and that's our model, we pre-fund the remittances, right? We can actually solve the problem of one party not paying the other, right? The money is already there and in our ecosystem. So to say it quickly, we actually are doing 2 transfers, at least for now. It works, it will be commercially successful and quick to implement. And later on, if Mojalab is really involved and wants to help us develop this on their side, and with the Interledger Foundation, who's really involved with that, we know, we can actually find a solution. Okay, so this is made. Do we need a CNP? So in the architecture we have built, I think this is the last thing. There is the cross-network provider, right? Which means simply an entity that is both a Rafiki participant and a Mojalab participant, because we need to pass from one to the other. And that requires that when an incoming Rafiki payment is established or arrives into the CNP, let's call it that way, well, you need a backend that actually updates the corresponding ledger. And thus, we were thinking there is Rafiki incoming, a ledger, right? And then this ledger will trigger, or this backend, let's say, will trigger a Mojalab payment. So it's 2 payments, the way without it. But, well, I mean, I sort of lost my argument because we have no time. But I'm sorry. So yeah, so that can work, and that's perfect. But we're discussing right now the possibility of not needing a CNP. Because eventually, and that's a discussion to have, Mojalab itself could serve as a Rafiki participant, and thus we could reduce 1 step. We have a CNP that's perfect for that. That is a money transmitter. It's part of the AMUX ecosystem, of the People's Clearinghouse ecosystem. But if we can do without, it's even simpler. But that's another discussion. So both are possible. Okay. Now, this would be a high-level description of what we're saying. In this example, we are doing a 2-leg transfer, so 2 transfers, in fact. We have a Mojalab section, which is up there, Mojalab Rafiki connector, right? So in this model, that means that the quoting and the transfer is done by Mojalab. We're using Rafiki, we're using open payments, but the quoting and the actual transfer happens through Mojalab. In the other model, which is also preferred by other people, there's a Rafiki quoting and transfer, and a Mojalab preset quoting and transfer also. Okay, so demo time. Please, my friend.
Okay, let's see how fast I can do this. Okay, so I'm going to do a demo today. There's going to be a lot of the items in the demo that's going to be simulated. What we have over here is we're going to be working with the green bank and the blue bank. In this case, the green bank is the CNP. And for that, we have a simulated, what we call the Mojalab testing toolkit. And this is going to simulate the requests coming into the CNP. And that is after the 2 Rafiki instances, one in the US and one in Mexico, has requested a quote. It'll be handed off by what we call the CNP backend, which is what we're looking at here. And the Mojalab switch will then be responsible for routing that quote and transfer to the relevant community bank in Mexico. Okay, so there we go. I'm going to start off by, I'm just going to go here and post a quote from, this will be the actual Rafiki server sitting in Mexico, and it will send a request. There is a very simplified version of the Mojalab API, and this is integrating with the Mojalab FSIOP API. So I'm going to go ahead and request a transfer. Let's be imaginative and think, yeah, we're sending pesos instead of euros here. So if we go here, firstly to the blue bank. So what's happened now is that the request was sent to the Mojalab hub. The Mojalab hub received the incoming request, the quote, and it then was responsible for creating a quote, and finally doing a put back into the Mojalab hub, which then sends it back to the US Rafiki instance, which would then need to accept the quote. And when we look at this dashboard, we can actually go and look at the quotes. And it should be the last quote in the list over here that was sent in. So we can see here, there's the quote that was created and the 2 parties involved, which is the CNP and the community bank. And with that you have, and this is something that we haven't discussed in this talk, but please afterwards come and talk to us about it. You've got the 2 fees associated here, one being the actual hub, the PCH fee, and then you could potentially also have the participant DFSP fee with that. Yes, so post that, I'm going to go ahead and create a transfer. So I'm just going to clear the queue here. So we could see that this transaction moved through the hub and was successfully sent to the, there we go, sent to the relevant parties. So the next step, I'm going to go and create the transfer. And we can see that this is creating a two-phase transfer that's being sent through the switch, and the same story. You will have the CNP backend and the community bank, and you will on this side you will typically run either a payment manager, or you would run if you've got a proprietary integration into the modular hub. You can there's a lot of options you can follow here, including a TissaWorks integration. So then finally you can look at the transfer here at the very bottom. These are two-phase transfers, by the way, running fully compatible with Tiger Beetle on the clearing and on the settlement side of things. Here you can see that this transfer was successful and it has been committed. And there's all the information regarding the transfer. And moving on to settlement. So I'm not going to go into any detail with how settlement works. This is something that I would love to discuss further with Adrian. But the bottom line is we've got one model defined over here, which is the default settlement model. And you would typically, it all depends on the hub operator, how you actually want to settle. You can do automatic settlements, you can do them manually. And I'm just in this case going to assume everything needs to be manual. So your transfer is completed, it has been sent to the settlement system, and it has been recorded. So in this case, I'm looking at a batch where each of those transfers has been allocated to. You have a pre-configuration. In this example, the batches would live for 5 minutes. Every 5 minutes, there will be a new batch that may be settled. And there's a big change from how settlement works today in Moduloop and how it's going to work. And that being that you're able to settle a lot quicker and a lot more frequent, because you've got flexibility on the settlement batches and not settlement windows anymore. So you could see that if I just do a search here on, well, this might need to go back even further. You can do a lookup to find all batches that's been created in the last day, and then you can choose to either create a matrix to go in, a dynamic matrix to go and settle based on search criteria, as well as selecting individual batches to settle. In this example, I'm just going to go ahead and create a static matrix, which from this screen, then you're allowed to do any disputes. And the great feature is that when you do disputes, you're only stopping a certain amount of transfer from being settled, but not holding up a whole settlement window that could potentially be a 24-hour period. And I will go ahead and, for the sake of time, just close the settlement, lock it, and perform the settlement. And if we go back to our participants, we would, okay, I didn't settle all of the transfers, but this these settlements accounts are basically the liquidity accounts, whereas the position accounts are the transfers to be settled. Thank you, yes.